Hello, everyone. Thank you very much for joining us today on a highly regarded topic, going over the function of asset management and multifamily investment. My name is Jack Folden. I am the Investor Relations Manager here at REEP Equity. Today, I have the pleasure of presenting with REEP's Director of Asset Management, Jason Martinez. Jason, if you don't mind, just to get us rolling, kind of providing a little bit of background on yourself, please.
Yeah, first, Jack, thank you guys for having me out here for this REEP huddle for asset management. The pleasure's all mine. I can't thank you guys enough for giving me this opportunity. A little bit about myself, Jason Martinez, currently the Director of Asset Management here at REEP Equity. I've been in the industry for, believe it or not, 20 years. It's hard to believe I've been going that long, specifically in this industry. It's been a great ride, to say the least. Over the course of my career, I've worn a lot of hats, operations, acquisitions, a little bit of CapEx, and uh, asset management. Most recently, previous organization I was at, VP of Asset Management, and we had a portfolio of 200 properties, roughly about 50,000 units.
Wow.
So a little bit bigger than REEP is right now, but yeah. Once this opportunity came over here at REEP with REEP Equity, too good of an opportunity not to pass up. I've been here for the past 2 years in this role and have relished every day that I've been here.
Okay. Thanks, Jason. Yeah, certainly appreciate that. I have no doubt with your guidance, we'll get to that size as well. So we'll keep working at it and give you some more properties and units to manage.
Please.
So with that being said, we do have many new attendees today, some of which are new to REAP. The first question I want to simply ask is, what does asset management do?
Wow, right off the bat, huh? I love it. Yeah. If someone's not familiar with specifically in the multifamily industry, what asset management does, I like to give a sports analogy sometimes. Think of me as sometimes as the offensive coordinator, sometimes even the defensive coordinator,
Okay.
in terms of what the asset manager's role is within the portfolio and each specific property. I think the high level just is strategic oversight of each property within the actual portfolio itself, ensuring that we add value and increase value over time over the life cycle of every single asset that we own, whether it's 1 year, 3 years, 5 years, or 10 years, making sure that we are hitting those milestones and KPIs over the course of time to bring value back to the actual the investors when it's all said and done.
Okay.
So there's a lot of players that are involved. Obviously, we'll dig into it later, but it's a lot of moving parts. It's my job to coordinate all the various departments that interact on a property on a daily, weekly, monthly, and annual basis.
Okay. So kind of a big picture there. Now you mentioned, weekly, monthly, annually, KPIs, all that good stuff. Simply put, what does a week or even a month look like in your shoes as an asset manager?
Yeah, well, I guess think about it like this. There's a lot of different players involved. It's not just collecting the rent and paying the bills. Yes, that's the lion's share of what happens, but that's mostly done on the operation side. So on a daily, weekly, or monthly basis, let me just give you a little oversight on some of the players I interact with. Obviously, our operations team, REIT Residential, they're the boots on the ground. Those are the faces of the property, essentially. Their job is out there to go collect the rent, pay the bills, rinse and repeat on a monthly basis. My job is to make sure it's going according to plan over the course of a month. No 2 weeks or no 2 days are ever the same, but if you think in terms of a monthly cycle, the first week of the month, operations is out there collecting the rent.
Hmm.
Halfway through, the account team is going to produce the financials. My job to work with you, investor relations accounting department, to get the investor relations reports out there for the previous months. When that happens, at the same time as we start to come towards the end of the month, I actually collect every single dollar that you can in terms of rent, making sure all the bills are paid, and working on the delinquency. Taking a step further, I also interact with our capital improvements program. As you know,
Mm, absolutely.
we are a value add shop here at REEP. Now, what does that mean? Our job is to infuse capital into every single property or every single asset from day one. So in the first 6 months, there's a lot of work that's being done over the course of the next year. We're taking care of the big ticket items, the roofs, landscaping, capital improvements, unit upgrades, lender required repairs, which a lot of people don't take into consideration, has to be done within a certain specific time frame. So asset management is dealing with all these various players over the course of a week, month, and annual basis to make sure we're hitting all these milestones and nothing falls through the cracks.
Okay. Okay. Thank you. Yeah, and you talked quite a bit about your collaboration with our operations team,
Yes.
right? Working in tandem with our property management company, REEP Residential. Um, what's the difference between asset management and property management for maybe some of the new attendees here that are just new to commercial real estate and multifamily in general?
Once again, yeah, perfect. If you think about it, when anyone goes out to a property, that is REEP Residential. That is our operations team. I like to say the boots on the ground. And I'll be the first to admit that REEP equity and asset management can only be as successful as REEP Residential, our operations team is. They are the lifeblood of the property's performance, making sure that we're hitting all those KPIs. It's my job to look at it from the 30,000-foot level to say, okay, here's what we're doing right. Here's where we can make some improvements on all these various KPIs, because sometimes they don't have the site. They're out there on the site collecting the rent, doing the work orders, doing all these day-to-day tasks that they're required to do to make the resident happy. It's my job to make sure that they are hitting their numbers. If there is room for improvement, it's my job to get them back on track and show them and guidance on how they can achieve those numbers. Simultaneously, I'm working with the lenders, our capital improvements team, taxes, the tax consultants, our insurance carriers. These are the individuals or the players that our operations team doesn't necessarily interact with on a day-to-day or weekly basis or monthly basis. It's my job to make sure we're doing the strategic performance and initiatives that we need with those other players so that when they do interact with the properties, everything is going according to plan.
Okay. So you talk a lot about, budget management,
Yeah.
taking a look at the numbers and the KPIs
Yeah.
that are presented to you from, REEP Residential.
Yeah.
If you don't mind, what are some of those key KPIs, right? I know I'm sure you could
Oh,
spend some time on that, but just at a pretty high level, what are some of those key KPIs that you always have your eyes on? I know you're a big numbers guy.
yeah, I think you talk to it, in the role of an asset manager, it can become analysis paralysis really, really quick. I've seen some shops where they have 200 KPIs that they're looking at on for every single property. It's not to say those 200 KPIs are not valuable to those properties, but at the end of the day, I'd like to just narrow it down to four. Obviously, there's a lot more that I dig into, but the first four: occupancy, collections, delinquencies, and renewals. You take care of those first four things right there, the rest should take care of itself, and the other issues that might come up seem insignificant when you take care of those first four. All four of those things feed into the financials, the trailing 12 profit and loss statement. If you are hitting on all cylinders on a property, occupancy, collections, delinquency, and renewals, and paying your bills on time, you're going to have a real clean financials. It's my job to look at the budget variances and other KPIs once we're doing those things. So that's just four KPIs that I'm always looking at on a daily basis. We're, to your point, I'm a numbers guy. So
Right.
everything is automated on our side. So we're actually built for growth. So these numbers are coming in, and anytime there's an issue that comes up with any of those first four, it's automatically flagged so we can be proactive in taking care of some of these issues that might come up on some of our properties or in certain markets.
Okay. Fantastic. So you've talked quite a bit about CapEx, right?
Yeah.
Capital expenditures
Yeah.
for those of you that aren't familiar with the term, really refers to maybe a rehab budget, if you will.
Yeah.
Um, when we're looking to acquire a property really quickly, when does that process begin? How do we accurately budget? How do we accurately budget for interior renovations and
Yeah.
maybe we're putting a dog park in at a property, right?
Mhm.
When does that start?
Well, people think that asset manager just takes over or is involved on day one of takeover. Actually, the process happens a lot sooner than that, before we even take over. As part of the acquisitions process, I'm working with investor relations, I'm working with our capital improvements team, and I'm working with our acquisitions team. Probably anywhere from 6 months, generally speaking, 6 months out prior to actual takeover and ownership by
Wow.
REEP Equity. So what does that mean? Our acquisitions team is doing the underwriting, they're doing the analysis, they're doing the valuations. I'm out there on site with our CapEx team, capital improvements team, doing what's called due diligence. Now, what does that mean? We're out there walking every single unit, walking the exteriors, and working with our capital improvements team and his vendors to get our vendors out there on site in advance of takeover to actually put a proper scope and or bids together to say, here's our budget going forward. So let's call it 30 days out prior to actual takeover. We have our firm bids in place. We have a proper budget, so we know how we're going to allocate these dollars. So as soon as we step foot on that property, day one of takeover, day one of ownership, we've got boots on the ground. We're turning dirt, and the hammers are flying out there in terms of renovating the process, renovating the property.
Right.
Now, what does that mean? Okay, rebranding, signage. Sometimes the lender is going to require us to do capital improvements that they want us to do to ensure that the loan, it's a good loan that's in place. What does that mean? Sometimes it's trip hazards. Sometimes it's landscaping, erosion, a foundation. Some of these things we need to cure in advance on day one of takeover, all the way through end of ownership. Now, once we've deployed all that capital with the capital improvements program or the rehab budget, as we like to call it, I also work with our capital improvements team and operations to make sure we're taking care of any deferred maintenance over time. Because the longer you hold it, the properties are going to show a little bit of wear and tear. So it's our job on the asset management side to work with accounting, operations, and to your point, capital improvements to make sure that that property is always adding value over the course of time and ownership period.
Okay. Fantastic. Yeah, and it's not only adding quantifiable value to the property,
Right.
right? But also adding value to the residents' lives in the
100%.
community and making it a more desirable place to live. So with that being said, just kind of a fun question here. Um, could you share an example of maybe a CapEx project, probably, something exterior, maybe it's a dog park.
Hmm.
Share an example of a CapEx project that greatly benefited a community within REEP's portfolio. Maybe your favorite CapEx
Right.
project
We got
so
24
far.
properties and 24 stories, as I like to call it.
Right.
They're kind of like stuff like no two properties are ever the same. So each one is going to have its own set of issues and or things we want to take care of over the course of ownership. However, one of the ones I like to remember when I first got here about 2 years ago, we acquired property in Austin called Viet Socos that some of the audience members might be familiar with. That one was a little trickier than usual because of the simple fact that prior to our takeover and or ownership period, there was actually a clubhouse fire, the office, um,
Right.
at the property itself, to the point where it actually burned down the entire clubhouse. So we inherited an insurance claim. A property is not success cannot be successful, right? It's a lot harder to be successful if they don't have a clubhouse where the boots on the ground, the operations team is actually able to perform. So we had to get that clubhouse back online
Mm.
as quickly as possible, working with somebody else's insurance claim and new vendors, because that was our first property in the Austin market. So you have all these different challenges are going on simultaneously, but I've got to give kudos to Victor Garza and our acquisition team and operations team because we had the foresight of here's how we're going to do it. It's just the fact that we're in a new market and a new challenge doesn't mean we can't be successful. So we got that clubhouse back online within 6 months. And when I say it was completely gutted, it was burnt down to the ground. So you have the operations team working out of a vacant unit to lease units. Simultaneously, capital improvements are going on board. And then while all this is going on, to your point, we built a dog park,
Mm.
put a gym up there, new amenities, which the previous residents on the previous ownership they didn't have. So as soon as you see all these upgrades happening, you get instant buy-in from the community that lives there on site. So the residents that were there, they see this, they see the new ownership, the new management, they just come in and all these improvements, and just like that, they got buy-in. And it's funny how that when that happens, word starts to spread. Um, where they're bringing in their friends, they're bringing in their family. So it's a
Mm,
marketing aspect that we didn't even think of. We knew it would happen, but the way that it happened, it just, I mean, it did a complete 180. And
right,
it's kudos to all the teams that were involved to get the clubhouse back online and all the new amenities out there on site at the property. And not to even mention the value that was added to the units on the upgrade aspect of it allowed us to really increase the rents higher than we fully expected when we went in there. So that is a perfect example of one that I like to, say, hey, that's one that we can all be very proud of.
right, right. Thank you for that. Yes, and I've of course been to the Viet Soko up there off South Congress, and
Yeah.
the clubhouse is it's beautiful,
Oh, it's amazing.
right? I mean, what an amazing project, well received by tenants.
Oh, yeah.
And you kind of touched on this. Um, a question I have for you, right? When we talk about these CapEx items, you talked about um, a new dog park, right? New revamping the pool area,
Yeah.
maybe building package lockers, implementing package lockers,
Yeah.
right? What are some of these CapEx projects that seem routinely well received by tenants?
Yeah. I mean, that's a great example. That requires us as an asset management team to stay in tune in what the market expects.
Right.
What does that mean? Okay, what do residents want? When I first started in the industry 20 years ago, there were no package lockers. You didn't have
Mm,
all these bells and whistles and all these amenities that exist today. Thanks to technology and a lot of improvements and reduction of expenses, these things are now common on B class and C class properties that once was not there before. But to answer your question, the package lockers, that's a very big amenity. People are still working from home. So if you have
mm,
a common area, a coffee, and myself included, I love my pets. You got to have a dog park. You've
absolutely.
got to cater to the animals. If you don't do that, the property across the street that is, they will gladly move over there because the dogs and the cats, they want to be, well received because they are residents as well.
Right.
So you got to make sure you're taking care of all these amenities, but obviously at the same time, you don't want to over improve a community is what I say. It doesn't necessarily need all the bells and whistles and all the glitz and glamorous things that you think they might need. So that's why we're always constant communication with the market, our operations, and most importantly, the feedback from the residents. It's also my job to make sure we're getting that feedback on a continuous basis, good and bad, and take that into consideration. Okay, and if we did this on future acquisitions, how would it be received? So that's we're always, the market is always constantly changing, so we always have to be in line with what is going on.
Okay, great. Thank you, Jason. Yeah, and I know we're about 20 minutes in. I do see a couple questions here rolling in, so we'll get to those in just a little bit. But for the sake of time, we'll take a step back. We're going to dive into a couple items that I know Jason can spend some time talking about.
We only got 30 minutes?
I'll say
Oh,
well, we're blocked for an hour,
okay.
so we'll see where it takes us. Taking a step back into the life cycle of a multifamily investment,
Mhm.
right? Three biggest expenses: taxes, insurance, payroll,
Yep.
right? Let's start off. Let's talk about insurance,
Yeah.
right? What role does asset management play in minimizing insurance premiums on these assets?
Yeah, I mean that's a critical piece of the puzzle. I mean, you hit the nail on the head there, Jack. There are three categories. I don't care if it's A class, B class, C class, where you're Texas, Florida, California, or all any part in between. Those are the biggest three expense categories across the board. Obviously, you're not going to ask someone to work for less. So, with payroll aside, the two biggest categories I like to deal with on the asset management side are going to be the taxes as well as insurance. Specifically on the insurance, you have to remember there's two insurance categories: property insurance. Think of it blood, flood, or fire. If that happens at your house or an apartment, that includes liability, your slip and falls, or anything that might happen there, a dog bite or something like that might happen there on site at the property. So you have these two different categories of insurance that are constantly going on. We have renewal programs in place for both of those with various carriers that we have to constantly renew. Now, the good thing is here at REEP, we've minimized the risk, we mitigated the risk, reduced the number of claims. I don't think we only have one claim that's outstanding, and that will be closed by the end of the year. And then at that point in time, that gives us the leverage that we need on our side to actually renegotiate our insurance premiums for both the property as well as the liability side. Obviously, the higher the risk, the higher the cost, but we've done a great job in the time I've been here of reducing and minimizing all these risks so that we do look like a good client for insurance carriers, which will help reduce the cost. Obviously, if you reduce the insurance cost, one of the major three expense categories, the higher your NOI. And so that's where asset management comes into play with our constant communication with tax consultants, as well as insurance carriers to make sure they're reducing those risks and increasing the NOIs at the property and portfolio level.
Okay. And you mentioned continuously renewing these policies.
Yeah.
Of course.
Mm-hmm.
Now, when we're looking to, mitigate and minimize these expenses, are we consistently sticking with the same providers, or what does that kind of look like, if you don't mind?
Yeah, sure. So we have on the insurance side, we have two brokers that are one for the property, one for the liability. Now, the thing is that it's out of our control is these insurance carriers are coming into the markets and going out of the markets, depending on what they see on their side. We have no control over that. Now, the better the insurance carrier that we have, and we have a great one that we've worked with for a number of years,
Right.
they have access to the best carriers that they're bringing to the table. So these insurance carriers are underwriting our portfolio on an annual basis based off our portfolio size, the number of claims we've had, anything that's still outstanding, and how we've closed everything out. So that's what's given us the leverage over time. And it's my job on the asset management side to work with the insurance broker to get the various carriers in there. And obviously, that's also a relationship game as well.
Absolutely.
We are very adamant about making sure we have a great relationship, not just with the lenders, not just our vendors, but also our insurance carriers as well as our tax consultants, because they know that we've been here. We're not a new player in this realm, and then the size and background that we have gives us that leverage, like I said, that we need to really put our best foot forward in terms of renegotiating these annual contracts.
Okay, fantastic. Yeah, really some items that really take place behind the scenes,
Oh yeah,
right? And few would really ever ask about,
yeah,
right? But you're always, working your tail off,
yeah,
in all honesty, right? And kind of staying behind the scenes, right? We talked a lot about insurance premiums, property
Mhm.
insurance premiums.
Yeah,
Another maybe, slightly uncontrollable expense, right?
yeah,
As you've mentioned, property taxes,
yeah,
right? Of course, we can't go to the appraisal district and say, tax us at this amount, right? But we can protest these
100%.
valuations, and we do protest these valuations.
Yes.
So maybe talk a little bit about, again, what role asset management plays. I know we have relationships with consultants that,
Yes.
are a huge factor in
Mhm.
these property tax reductions. So
Yes.
talk a little bit about that, please.
Yeah, a tax consultant, just like an insurance carriers, is worth their weight in gold in terms of what they bring to the table. So I like to say I deal with the unsexy categories, insurance and taxes. However, when you think about it, it's a huge potential a very big component of every single property. Now, in terms of the taxes, just like a house, each one of our properties is evaluated on an annual basis based off the county that they reside in. So we have Bear County, Harris County, Fort Bend, and Travis County
Mm.
are the four counties that our property or our portfolio is based out of. So as these valuations are coming through, usually about end of Q1, start of Q2, right about that time frame, we're taking those valuations in. We're presenting the data to our tax consultant, and we're having continuous negotiations on, we are going to protest our taxes, but how aggressive do we want to get?
Mm.
There's an arbitration process that can happen. And obviously, digging into the weeds, doing the analysis with our tax consultant, we get an idea every single year of how much we could push on each valuation for our property. So that's just a general idea of how it works at the 30,000-foot level. But it's a continuous process. I work with our VP of acquisitions on an annual basis in terms of how we're going to do it and what the mindset is and what our growth projections are and to see how we're doing. That also gives us a better idea of how the appraisal districts are working on their valuation. So in tune, working with the acquisitions team, they know how they can foresee projection wise how that's going to happen and how taxes will be affected in terms of the underwriting we do internally on our side.
Okay. And you mentioned that we really identify on a property by property basis how aggressive we want to be on these protests.
Right.
What's the thought process there to, decide, okay, on this property, we want to be extremely aggressive and realize that, a $3 million deduction in
Mhm.
our property tax valuation versus maybe a less aggressive approach. How do you identify that approach?
I wish I could say it's A, B, and C, and X, Y, and Z. It's more of an art
Okay.
than a science, honestly, because I've seen it where you have two properties, not necessarily the ones that we own, that might be a couple miles apart, and they, same vintage, same year, yes, maybe different number of units, but I can see like a $5 or $8 million variance, and there's no rhyme or reason on sometimes on how the actual appraisal district actually evaluates some of these properties. So that's what I'm saying. You have to look at each valuation when it actually comes out for each
Mm.
individual property and see how it correlates, not just with that property itself historically over time, but also its peers within the market, but also we have access to how other similar vintage and or apartment complexes that we might or might not own, how they're being evaluated. So you're taking all this data and information
Mm.
in, presenting it with our tax consultant on a property by property basis. So essentially we're having 24, 25 conversations, one for each property, on
Right.
where it's assessed and how it's in comparison to its peers and how aggressive, unfortunately, sometimes the appraisal district has gotten on that specific property. For what reason, I don't know. I wish I could give you a better answer, but essentially, those are the kind of conversations that we're having for every single property within the portfolio.
Okay. Now, I assume you've protested property taxes on a few properties
Yeah,
in your time. So, as of recent, we've realized some pretty fruitful
yeah.
reductions in valuations.
Mhm.
Maybe if you don't mind, talking a little bit about what these reductions in protests maybe look like during something like COVID, right?
Yeah.
Compared to today, where we're starting to, really see some sizable reductions in these
You
expenses.
have to remember that the appraisal district, this is the lifeblood of how they make a lot of their money. So the
Right.
more aggressive they get, the better. Now, the COVID aside, since we've come out of that pandemic, you can see across the board, whether it's Harris County, Bear County, Travis, or just generally speaking, the state of Texas, which I'm very familiar with, the counties and appraisal districts have gotten a lot more aggressive since we've come out of that.
Hmm.
Now, once again, you can mitigate that risk over time, the sooner that you get your tax consultant involved. Now, obviously, if you didn't have a tax consultant involved and you didn't protest taxes, you would have seen a roller coaster ride up in terms of the valuations. Now, like I said, we protest taxes every single year for our portfolio. And that's what has helped minimize that or mitigate the increase. You're always going to have an increase in taxes. I've never seen them go down, unfortunately. But the less harder it is, the easier it is to have this conversation every single year on every single
Mm.
property to help lessen the blow, let's call
I
it.
see. I see. So essentially, maybe the appraisal districts have gotten a bit less aggressive as
Uh,
of recent. Is that
yes,
fair to say?
yeah, I
Okay.
would say the last year, especially, they have gotten less aggressive. They're still increasing values,
Right.
but yeah, it's not nearly as bad as it was 5 years ago. That's not to say that it's going to change. Those conditions are out of my control, but we're going to do everything we can to make sure that we take care of lessening that blow, like I said.
Right. Right. And we have seen some sizable reductions in those
Oh yeah.
expenses, thanks to you and
Ah,
your team
yeah.
and the ops team as well, of course, and many others. So, okay. Kind of looking at the end of the Q&A, and I do see one question here that ties into this, that the last question I have for Jason. And that question is, talking about the investment life cycle,
Yeah.
right? When we're coming up, typically our investments are, 3 to 5 year hold period, on
Mhm.
average about a 3.5 year hold.
Yep.
When we're approaching, a potential disposition or even, let's say a refinance for a property, right? Just a capital event in
Yeah.
general. How does asset management prepare and position the property for that capital
Oh, I'm
event?
glad you asked that, or I'm glad someone asked that. It's funny because a lot of people are under the assumption, okay, you just put the property up for sale, you're good to go, get the top dollar. But that's the key role of asset management. I like to call it seasoning the financials, seasoning the rent rolls, making sure that property is performing at its optimal uh, point terms of occupancy, collections, and financials. It's a lot easier to have this conversation when the financials are clean, your property's at 94% occupied or better, and delinquency is below 2 or 3%. You can refi that deal or sell that deal all day. The question was, when does asset management get involved? The truthful answer is at least a year prior to that potential disposition date. Now we couldn't say, okay, we're going to sell it on October 31st, 2025, but we generally speaking, it might be that the month and or quarter of that year. So we are backtracking at least 1 year. Now, what do I mean? We're always constantly watching every single one of our properties, but now we do a much more keen eye on all those key KPIs as well as the financials. We're working with our lenders. We're working with our operations team, working with capital improvements, curing any of these things that we can so that we essentially the property is putting its best foot forward when it either goes on the market or goes out for a refi. And generally speaking, the dispo process in a perfect world takes about 6 months for it to go on the market, for it to be go out to the brokers, go out to the investment community, go under contract, be awarded the deal, go to due diligence, closing. Best case scenario, you're talking about 6 months. And I need at least 1 year runway prior to that disposition date on a refi and or a disposition, because like I said, these conversations are a lot better to have and easier to have with the lenders, the brokers, and potential buyer of any property when a property is performing. But it takes, generally speaking, a year to get to that point, because these properties cannot just turn on a dime in terms of that. And you want to just see a good trend going forward. So at least a good T3 income, T12 expenses. And once you start seeing, analyzing, underwriting that kind of deal that looks really, really clean, it's easy to sell the deal at the top value.
Okay, fantastic. Yes, I know. We all want to sell the property at the top value. Absolutely. So,
Like I say, every single property is up for sale the day after you buy it at the right price.
That's right. That's right. Okay. Well, thank you, Jason. I don't see any other questions here. I know we've been talking for about 35 minutes. So if no other questions appear, we'll say thank you all for attending today. Really appreciate you taking the time to listen to Jason and I converse here and maybe having your lunch with us today. So with that being said, this REEP Huddle has been recorded, of course. Should you have any additional questions or wish to retrieve the recording, please don't hesitate to reach out to invest@reepequity.com. Really appreciate you all being here, and huge thank you to Jason as well.
Hey, thanks for having me. Can't thank you guys enough, Jack. Thanks.
Absolutely. Thank you all. Have a great rest of your day.